Friends, welcome back. So, having covered allowances relating to salary chapter, so now we'll be learning perquisites. So, perquisites, as you know, when you talk about perquisites, this exactly means the non-monetary benefits. So, normally, an employer gives some non-monetary benefits to the employees also. Like, for example, you can think of something like rent-free accommodation, free houses are given, or something like free use of a vehicle. So these non-monetary benefits are called as perquisites or perk. So let us see how their value will be computed and their values are added to salary income. So just have a look. I have shared the screen with you right now. So coming to meaning, so perquisite means in ordinary sense, any remuneration to employees in kind. Perquisites are not given in cash. This is a remuneration which is given to employees in kind and for taxation purpose. So we are going to classify this perquisites into three categories. This is for our understanding. First of all, there will be some perquisites which will be taxable for all employees. Secondly, there is one more category of perquisites which are tax-free for all employees. They don't have to pay tax on that. Third is that there are some perquisites which are taxable only in the hands of specified employees. Now, this question might be coming to your mind, then who are these specified employees? So we'll be understanding who are these specified employees because there are some dates which are taxable only for them, not for other employees. Okay, so this is how we'll proceed to understand the concept of perquisite. First, let us see what are the things that are included in perquisites. So there are a list of items. All these items we'll be saying. Number one, value of rent-free accommodation provided by the employer. If employer has provided some rent-free accommodation to the employee, that value of that rent-free accommodation needs to be ascertained, and that is a perquisite, and that will be added to salary. Second situation, employer might not have given any rent-free accommodation, but he might have allowed some concession in rent. For example, employer has given a house. One can understand the market value of the market rent of the house may be 5,000 rupees, but employer is charging employee 100 rupees. So this is the value. This is a concession given to the employee in the matter of rent. So value of concession in rent in respect of accommodation provided to the associate by his employer is a perquisite. That perquisite needs to be evaluated and needs to be added to salary income. Understood these two? First is rent-free accommodation. Second is concession in the matter of rent. Right?
Yes, sir.
Third one is the value of any benefit or amenity granted or provided free of cost or at a concessional rate to specified employees. So there is a need to understand specified who are the specified employees, and if some benefit or amenities are granted to them free of cost or at a concessional rate, that has to be included in salary. We'll be learning that. Point number 4. Perquisite also includes amount paid by an employer in respect of any obligation which otherwise would have been payable by employer. That means it is the obligation of the employee, but that obligation is made by employer. Okay, employee's obligation made by employer. So that obligation which is made by employer is a perquisite for employee, and it will be taxable in the hands of employee. For example, let us say payment of professional tax is the liability of employee. But let us say employee is not paying. On behalf of employee, employer is paying that. Then that is a perquisite, and that will be added to salary income of employee. Is it clear to you? Any obligation. Let us say employee has to pay his life insurance, but employee is not paying on his behalf, employer is paying. So that is also a perquisite. Did you understand this?
Yes, sir.
Then point 5. Sum payable by an employer, whether directly or through a fund other than recognized provident fund or approved superannuation fund or deposit linked insurance fund. So here we are talking about the sum payable by employer, whether directly or indirectly. That something is paid by the employer, but through a fund. Employee might have created a fund, and through that fund, that means the employer is not directly paying. Employees are paying to the fund, and this fund is paying to the employer. Okay, so indirectly that is rooted. Okay, but that fund doesn't include recognized provident fund, approved superannuation fund, or deposit linked insurance fund. So except this fund, if employer is routing some payment or some money through a fund, then that will be also treated as a perquisite. Is it clear?
Yes, sir.
Next, specified security or sweat equity shares allowed or transferred to employee by the employer. Let us say employer has let us say allotted some shares to employee free of cost or maybe at a consistent. Let us say market price of share is 600 rupees, but it is given to the employee at 50 rupees or at nil cost. Why it is given? Because employee might have contributed something, given some, let us say, technical consultancy, or employee might have worked. That means employee has contributed not in terms of money, but in terms of labor. So in that kind of situation, the sweat equity shares are allotted to the employee by the employer. So this amount or this value of that sweat equity share or any specified security which is allotted or transferred to the employee is a perquisite, and it is taxable, and it will be included in the employee's salary. Understood?
Yes, sir.
Next is contribution to approved superannuation fund or recognized provident fund or national pension fund by employer. So if employer is making any contribution to these funds, employer's contribution, then that part, employer's contribution part is the perquisite. But here you have to see, it is perquisite only when it exceeds rupees 7,50,000. Okay, so any amount contributed in excess of 7,50,000 rupees to approved superannuation fund or recognized provident fund or national pension fund by the employer is a perquisite. Point 8. Any accretion to the balance at the credit of recognized provident fund, national pension fund, or approved superannuation fund, which relates to employer's contribution and included in total income on account of same having exceeded 7,50,000 rupees. Okay, so if some balance is accredited because of interest application or whatever to this kind of funds like superannuation fund, national pension fund, or superannuation fund. Okay, and this accretion relates to employer's contribution. Let's say employer has contributed more than 7,50,000 rupees. As you know, the excess amount is a perquisite. And any income accredited or any income which are earned out of that excess contribution, that is also a perquisite. Understood?
Yes, sir.
Next, certain points also we need to remember as regards to perquisites. Friends, try to understand these perquisites may be received from the present employer, from past employer also. It may be contractual or maybe voluntary. Maybe in the employment contract, there is no mention about perquisites, but employer might be giving it voluntarily. Still, it is perquisite. It is taxable under the head salary if it is allowed by the employer to employee or his family member. Let us say employee is not staying, employee might be staying elsewhere, but in the house, employees, family members are staying. Still, it is a perquisite. Okay, it should result in some personal advantage. Employee is getting some personal advantage of, and it is delivered to the employee by virtue of his authority of employer. That means employer is giving this facility as an employer. And this facility might be availed by the employee or his family. And family member includes spouse, children and their spouses, parents, servants, and dependents. All of them are part of family. So far as perquisites are concerned. Okay. Now, as I told you, so we can find out some perquisites are exempted for all, some perquisites are taxable for all, and some perquisites are taxable only for specified employees. Friends, here I am showing you a list of exempted perquisites, meaning these are taxable for all. Number one, refreshments. That means tea and similar non-alcoholic beverages or snacks which are served during working hours or extended working hours in the office or factory, etc. They are exempted, so they are not taxable. Okay, so this type of replacement which is served in the office and provided during the working hours or extended working hours are exempted, are not taxable. Understood this?
Yes, sir.
This is about replacement. Next is free meals. Meals are different from replacement. If free meals are provided in office or through non-transferable coupons, sometimes some employers, what they do, they give coupons to the employees. An employee may take that coupons and encash in some restaurant and have the food. But the coupon should be non-transferable. That means coupon should be used only by the employee. It's not that it will be given to somebody else, you will be encashing it. No. If it is a non-transferable food coupon, then it is exempt. Or food is directly served in the office. Then up to rupees per meal is exempt. Excess is a perquisite. Let us say food is served to the employee and the cost is 60 rupees. Then 50 rupees is exempt, 10 rupees is a perquisite. Or employee is given a food coupon, non-transferable food coupon of 70 rupees. Then 50 rupees is exempt, remaining 20 rupees is taxable. Understood?
Yes, sir.
Next item is free ration. Free ration supplied to the armed force personnel are fully exempt. Then next perquisite, goods manufactured by employer sold to employee at a concessional rate. That is also exempt. But here you have to see goods are actually manufactured by employer. Let us say there is an employer who is manufacturing mobile phone. And let us say mobile phone is 30,000 rupees, he is giving to an employee at 10,000. That 20 rupees benefit that employee is getting, 20,000 rupees benefit that employee is getting. So that is a perquisite, but that is exempted. That is not taxable. Understood? So goods manufactured by employer and sold to employee at a concessional rate are exempt. Okay. Now next is conveyance facility provided to the employees for journey between office, residence, and vice versa. Let us say employer is sending a vehicle and employee is using that vehicle. So this type of conveyance facility, which is provided to employees for commuting journey between office to residence or residence to office, they are exempted. Okay. And next exemption is the training cost or expenditure incidental to training of employees. So if there is some training cost, let us say employees are provided with some training and employer is incurring some cost to them or some incidental expenditure. Let us say employee has traveled for training. It's an incidental expenditure related to training. So this training cost and expenditure incidental to training of employees are exempt. It's a perquisite, but it's an exempted perquisite. And as you are also aware of, for government employees, any perquisite to government employees being citizen of India, working outside India are exempt. We had discussed it in a previous session also, that government employees who are working outside India, if they are citizens of India, then perquisites are fully exempt. So also allowances are also exempt. Next, employer's contribution to staff group insurance scheme. If employer has contributing something for staff group insurance scheme, that is also a perquisite for exempt. Then employer's contribution to pension or deferred annuity scheme. The employer has contributed something to pension scheme or deferred annuity scheme, that is also exempt. Okay, few more points are there, but did you understand these 9 points?
Yes, sir.
Okay. Next, in the list of perquisite, you have to see the next points. Point number 10 is medical facility at office. Here we are not talking about medical allowance. We are also not talking about medical reimbursement. We are talking here about the medical facility provided in the office. Let us say in the office there is a dispensary, or in the factory there is a hospital and medical facilities provided there. That is exempt. Okay, or a doctor is coming to office on a specific time or a specific day, and some facilities is provided, and this medical facility is provided to the employees, then that is exempt. Understood? Similarly, medical insurance premium paid by the employer. If employer is paying medical insurance premium of employees, that is again exempted. Periodicals or journals provided to employees, that is exempt. Then telephone and mobile phone facilities provided to employees are also exempt. Then free education facility. Here again, we are not talking about education allowance. You know how education allowance should be taxable. But here we are talking about free education facility, employees providing facility to the employee children up to 1,000 rupees per month per child is exempt. If education facilities are provided, so employer is having a school, there this facility is provided. How much is exempt? 1,000 rupees per month per child. That's it. Here you see there is no mention that maximum for 2 children. It is not like your education allowance or hostel allowance. In education allowance and hostel allowance, you have already seen in our previous session, there is a max limit. That means one can avail that exemption only for 2 children maximum. But here for free education facilities, there is no restriction as regards to number of children. Okay, so if education facilities are provided to the employee children, up to 1,000 rupees per month per child is exempt, and the extra amount is taxable. Then health club facility, sports club facilities, etc., provided to employees are exempt. And use of computer and laptop facility in the office are also exempt. Okay, these points, is it clear to you up to this?
Yes, sir.
Few more points are also there, so let us cover that thing also. Now you see, rent-free accommodation to High Court judges or Supreme Court judges are exempt. Rent-free furnished accommodation provided to official of parliament or a union minister or leader of opposition in parliament, these things are exempt. Next, in rent-free accommodation in remote area to an employee working at a mining site or onshore exploration site or project execution site or a dam site or a power generation site or an offshore site. Okay, in these places, employees working in this area, he's working in the mining site, onshore exploration site, or project execution site, dam site, power generation site, and one rent-free accommodation is provided to employee in a remote area, then that is exempt. Then perquisites is provided to chairman, a retired chairman, or any other member, a retired member of union's public service commission are exempt. Next, tax on non-monetary payments of employees. So if some non-monetary benefits like perquisites are provided to the employee on which tax is paid by the employer, then the tax amount, tax and non-monetary payment, the tax amount will not be treated as a perquisite, taxable perquisite, it will be exempt. So in case of an employee deriving income in the nature of perquisites and not provided by way of monetary payments, that means it's not monetary payment. Perquisites means normally it is non-monetary benefit. And tax on such income is actually paid by the employer. Such income means on such non-monetary benefit if tax is paid by the employer at the option of the employer. That means the employer voluntarily is opting to pay tax on the non-monetary benefits and he's paying this tax on behalf of the employee because it is the tax liability of the employee, but employer is voluntarily paying that. Then such tax on non-monetary perquisites shall not be taxable in the hands of the employee. That is, the tax amount will no more be treated as a perquisite. Okay. Understood this point?
Yes, yes.
Yes, sir.
So friends, these are various issues we wanted to know about perquisites. Now, as you are aware of, we are discussing that we need to understand what is the meaning of the specified employees, because there are some perquisites which are taxable only for specified employees. Okay, so to understand that, I think we see that the three things are there, three issues are there. First of all, director employees. That means if the employee is a director, even for a single day during the previous year. Okay, so employer is a company and the employee is a director. Then he is a specified employee. Okay, and here we are director means we're talking about company director, not a director of a cooperative society kind of entity. Okay, so director employees are always specified employees. Next category of employees, the employee who has substantial interest. Substantial interest means 20, at least 20%, that is 20% or more of voting power. Let us say employee owns shares of 20%. Then he is a person, he is an employee with substantial interest. Or it's a partnership for an employee is having more than 20% share in that firm. Then employee is a employee of substantial interest. He is a specified employee. Understood? And this shareholding has to be seen individually, that employee should be holding it in his own name. If his employee is holding it the name of his relative, that will not be taken into consideration. Let us say employee is holding 9% share and his wife is holding 2% share. So 2% in the name of spouse and employee 19%. Then employee is not an employee with substantial interest because he individually is holding below 20%. Did you understand?
Yes, sir.
Now, third point here is that, which is important for us. Employee with gross salary is more than 50,000 rupees during the previous year. So here, because of this condition, you will see most of the employees will coming as specified employees because the gross salary it is saying more than 50,000. So most of the employees normally will be having more than 50,000 rupees salary per annum. Okay. And here, to arrive at that gross taxable salary, so non-monetary perquisites and employers' contribution to the provident fund has to be excluded. Deductions will be allowed. On that basis, we'll see what is the gross taxable salary. If it is more than 50,000 rupees during previous year, then the employee is also a specified employee. Understood who are the specified employees?
Yes, sir.
Okay, so again, I repeat, first of all, a director, what I showed you in the chart, same thing is explained in the slide. Even if a person is a director for a day, he is a specified employee. He may be a nominee director, he may be a part-time director, but doesn't matter. He's a director means he's a specified employee. Okay, but he is a specified employee only for that organization where he is the director, not for other organization. Okay, only for that particular organization where he is a director, he will be treated as a specified employee for that specific entity. Then employee with substantial interest, as you have seen, he should be the beneficial owner. Okay. So here you have to see that he's holding equity shares carrying 20% or more of the voting power. Okay. That is relevant rather than the legal ownership. So let us say such 20% or more voting power must be held when the employees individually, not with his relatives. This example also you have seen. Okay, if that is so, the employee will be treated as a specified employee. Then employees with gross taxable salary more than 50,000 rupees will be treated as a specified employee. Okay, here salary means taxable monetary payments, excluding all non-monetary perquisites, employer's contribution to provident fund, and after allowing deduction under section 16.2 and 16.3. So after this thing, we'll find out what is his taxable monetary payments. If it exceeds 50,000 rupees, he is specified. Now, why we are trying to learn what is a specified employees? Because there are some specific perquisites which are taxable only to specified employees. So here is a list you can see. Provisions of sweeper, gardener, watchman, then personal attendant, facilities for use of gas, electricity, water supplied by employer, then free concessional tickets, free motor car, education facilities. So all these things are there, which are taxable only to the specified employees. Okay, so one by one we'll be learning. First will be rent-free accommodation. We'll see how it will be taxable. Okay, so today we'll stop here. So all these perquisites you'll be learning in one next session. Okay, friends.
Okay, sir.
Yes, sir.
Thank you very much. We'll catch up in your next class.
Thank you.
Thanks a
Yes,
lot.
sir. Thank
Thanks.
you, sir.